Tracker segment for today, and we have with us Prashant Mehra, as always, of Thornton Bharat. And in fact, Thornton Bharat has come up with this report on the October deal flow, and it is hugely declined. In fact, 44% down in terms of volumes and over 70% down in terms of the value of the deal. So there is a slow lane on the deal street, and Prashant will tell us more. So Prashant, we are more than halfway through in the month of November. The data has been put out for the month of October. Is the same sentiment really spilling over to this particular month as well?
Um, Hi, Nishant. Fortunately, actually, the sentiment is reversing as it is usual when you move towards the end of the calendar year. We are seeing a lot of traction of deals coming in. November, we will see a lot of closures as well. It's already started clicking. While you mentioned that, yes, October has been one of the slowest months as far as 2022 is concerned. Having said that, if we look at a year to date and compare it to last year, we're still about 50% higher in terms of value, whereas the volume increase is meager at about 2-3%. But now that the quarter 2 results are out, balance sheet seem healthy. The focus, yes, is on domestic growth, but at the same time, there is an opportunity in the market which is about consolidation. There are a lot of deals which are in the pipeline. We will see a lot of closures between November and December, which we've already started seeing in November, and hopefully we'll end the year on a good note.
Right. While we are so hopeful about the year-end deal closures, which have been really going on for a very long time, Prashant, that is usual phenomena. But the volatility in the market, so much uncertainty about the economic scenario is generally not existent. So how is that going to impact the deal flow closure as well as the valuation dynamics, according to you?
Very important question, Nisha. Yes, I think in 3 parts. As far as the global indicators are concerned, yes, there are most of the countries are going into recession. I think UK formally declared it earlier this week. It will impact transaction flow in India as well. But I think the fact that our economic indicators continue to be very strong will make sure that not just investment is attracted into India, but also there is a lot of consolidation which happens in the market. That's one. As far as valuation is concerned, I think some sensibility will need to prevail there.
Right.
Normalization will happen, and towards the first quarter of the next year, we will probably see that happening, and again, the deal flow picking up once again.
Right. So first quarter of next year is when we are expecting a much better deal flow. But Prashant, very little time. Two important questions. One, the equity market window did open up. Some of the IPOs did happen. And also the biggest theme that we are seeing right now is also the, digital companies which listed last year having their lock-in periods being terminated and a lot of blocks taking place. How is this particular area developing? And startup IPOs, are they making any attempt at lower valuations right now?
Yeah, I think this is all part and parcel of digital and technology companies coming on the market. I don't think so. This will have a material impact as such. As far as other digital companies and startup IPOs coming in, we need to be very clear. And I think this is a post-pandemic scenario that just the top lines are not important. It's important that the companies have a business model, which is not just a revenue model. Once that is there, there is an IPO case in play. Yes, there needs to be money in the market also to be spent on an IPO. And I think once the valuation normalizations happen, these block deals have seen the light of day. Traction will continue in quarter 1, which is when we hope to see a lot of technology IPOs between January to March of next year.
All right, so that's the wishful thinking at the moment, see how the markets go. But finally, Prashant, very quickly, private equity flows have really, been tepid in this particular year. How are they poised? Are they finding the valuations much more attractive right now, or is it wait and watch? And which sectors are going to be more active on the deal street right now for the next 2 months?
I think private equities are probably following a wait and watch thing. My personal view is that they will continue to fund consolidations in the market, which should happen in the next couple of months. Normalization of valuation will happen. But I think what is very interesting is that some new sectors are coming up just in October. If you look at the report, education, media, entertainment, retail, consumer, financial services is black on the block. These are also some of the notable sectors in which investments are happening, besides the usual suspect, which is technology companies. So encouraging indicators, but yes, what really comes out of it is something that we will need to see in the next few months.
And what about the debt-laden companies? Do you think that distress sale, especially in the debt-laden companies, the brick and mortar, the old economy companies, is that going to reverse now with the interest rate hardening cycle? And also, on the other hand, some of the startups which have been finding it difficult now for survival because of the higher valuations, is there going to be distress sale on that front as well? Because a lot of experts are telling me that consolidation is looking quite tough.
Well, yes, I believe there will be. I wouldn't really call it distress sale. I would call it buying at the right value. Those transactions will also happen. But I think we're a little past from brick and mortar and technology. Anything which is any business which is not moving with the times and is not innovative. Technology is an enabler. There are really no technology and non-technology companies. Technology is an enabler, but as far as companies continue to innovate, I think they will continue to grow. Yes, distressed sales or sales at the right value will happen. And those will be really interesting to watch out. But again, I think in the next month or two till the end of the year, we will just see closures happening, not really new deals coming in and closing.
All right, Prashant, always a pleasure speaking to you right here on CNBC TV18. So the big takeaway is that the deal flow is going to be better than October in the next few months to come. But then the big item to watch out will be the valuation mismatch between the buyer and the seller, whether that finds a consensus in a very volatile market. With that, we'll slip into a short breather, come back on the other side for more news and market action.